per barrel, and this is flat. Well, let's get to our first conversation. Yes, inflation. Nigeria's headline inflation rate slowed for the fourth consecutive month in July 2025, setting at 21.88%. That's for the month of July. That's from the National Bureau of Statistics. In what is considered a slight relief for a nation facing persistent price pressures. Consequently, the 0.34 percentage points decline from June's 22.22% has boosted expectations that the Central Bank of Nigeria may soon rotate from its aggressive monetary tightening stance, which has kept borrowing costs at a record high. Now, month-on-month difference for July 2025, we saw a month-on-month difference of 1.99%. For June 2025, we saw a month-on-month difference of 1.68%. Also on my slide today, let's see July 2025 and June 2025. This were the figures recorded. Don't forget, there was a rebased GDP, rebased inflation rate, I beg your pardon, consumer price index. Yes, we had a rebased GDP too, but we had a rebased consumer price index, which also puts our inflation figures down, considering other commodities put in that basket that was analyzed for inflation as reported by the National Bureau of Statistics. Moving forward, we see that inflation, food inflation, neither here nor there are still concerns around the drop with regards to food inflation. But the CBN has been at the forefront of the fight against inflation, employing series of measures, including a sustained increase in monetary policy rate, stricter liquidity management to absorb excess naira from the system. Let's look at the fiscal side. The federal government has also intervened with targeted agricultural support schemes, the release of grains reserves, import duty waivers on critical food items to ease supply-side pressures. According to analysts, these combined efforts are finally starting to work their way through the economy, leading to a gradual, albeit uneven, decline in price levels. Now, let's look at this chart. Inflation trend in 2025. Let me take you back to the month of March from 24.23%. That's where we started, where the decline started. In April, 23.71%. And moving to May, 22.97%. That's what we've seen with inflation. And in June, 22.22%. And in July, which is the month we're staying with at the moment, inflation stands at 21.88%. My guest is Kenneth Erikume. He's a partner with Pricewaterhouse Nigeria. He leads the tax reporting and strategy in West African area. Mr. Erikume, you're not in the studio, but all the same, thank you so much for being on the program. It's good to see you.
Yeah, thanks, Tolu, for inviting me, and looking forward to our conversation.
Okay, let me start with your expectations. I think we've seen this decline for probably 4 consecutive months now. Did you expect any change? But considering the month-on-month shift that we've seen, how does it come to you? What's your understanding of Nigeria's present inflation trend in 2025?
Yeah, thanks, Tolu. I always say that the context of inflation also has to be considered in relation to growth in GDP. So economists will tell you that inflation in itself is not necessarily a bad thing. It's when there are shocks in the economy, that's when it is adverse. So when you see the sort of month-on-month changes in inflation, it suggests that food prices are still increasing. There are several costs that are still putting pressure on the economy from an inflationary perspective. However, it has slowed down to a level where it is pretty stable, and people are fairly comfortable with the way things are easing out. even the CBN's Inflation Perception Survey that released in June 2025 shows that we are not yet out of the woods. There is still higher inflation expectation in the second half of 2025. So, nobody's under any illusions that we are completely out of the woods. However, the level of inflation we're seeing and the decrease, shows that from an economic perspective, the worst is behind us and things are beginning to stabilize. So overall, I believe the outlook is positive, especially when you look at the 21.88% inflation, which would give a lot of confidence, not just to the domestic market and operators in the system, but also for international investors. I think the area where people would also want to see some sort of easing as well is in relation to interest rates. So the MPR reference continues to be significantly high, and that drives the cost of borrowing for participants in the economy, whether it be manufacturers or service providers. And that elevates, while you can see that, the banks and financial institutions continue to record growth, and you also see the ICT and construction and real estate industry blossoming. Manufacturing continues to be under significant constraint, and it's a very difficult challenge from an economic perspective, because if you then from a monetary policy perspective, ease the pressure in terms of interest rates, then you can begin to see some slackening in terms of inflationary pressures, and it could go back up again. So it's a very difficult and challenging situation for regulators. But I believe in the future, there would be a reconsideration of certain elements of the interest rates, which can then, put more, give the manufacturing sector a bit more boost to contribute more to the GDP.
Interesting point you made, and I was actually heading there because I think that this should give the monetary policy team, maybe the encouragement or that, to be able to have a shift in this tight monetary rates that we've adopted for some time. But we know that even the IMF and the World Bank that have continued to commend Nigeria have also warned that we need to still tightening our rates, considering what we've been getting from these international lenders and, of course, international ratings agency. What do you think, really, if there's going to be a shift? Do you think that would happen at the September meeting? That's on one side. Then on the other side, issues of agriculture, food, and support coming from the federal side, that's the fiscal side now. Do you think that we are there with regards to food inflation? Because that is something that remains very important. Once people can eat, feed, I think we will get a headway.
Yeah, thanks, Tolu, for that question. My belief is that if something is working, you don't change it abruptly. So obviously it will be under consideration in that meeting. However, I would, if I were to be a predicting man or a betting man, I would say that people would be a bit skeptical around reducing the interest rates. And we've seen, a certain level of stability in terms of the CBN's policy stance, which is firmly anchored on price and financial system stability. And over the past couple of years, we've seen continued focus on tightening interest and liquidity management. And also on the flip side, from an FX liquidity perspective, some focus around deepening remittance flows, and strengthening the adequacy ratio, capital and ratios of banks. So those are fundamental principles that I believe we'll continue to see going forward. So there was one of the meetings where I anticipated a reduction, and it was maintained at the same level. So, if I was going to bet, I would say maintenance of the status quo in the short term is what we may likely see. Because once you ease that interest rate tightening, then we could, significantly lapse from an inflation perspective. But like you said, it's not just about using interest rates to manage inflation, right? Because the huge impact is usually food and energy. So those are two areas that government, food, energy, and transportation. And those are the three areas that government needs to focus on. And I think particularly, like you rightly identified, food inflation in particular. And some of the interventions that government has done in the food sector illustrates the importance that the government views this sector as important in managing inflation. So there has to be continued focus in ensuring food security, elevating domestic production, and ensuring that the food supply chain is sufficiently secure. So this would require intervention both from a security perspective. When I say security, actual security, and ensuring that the security in the north is maintained. But in addition, ensuring that in the short term, import duties are managed on essential grains, where people are bringing that into the domestic market. So government obviously cannot leave that just to the private sector. There has to be significant intervention in that space as well. I think in the medium term, infrastructure has to be something that the government has to invest in as a critical lever in ensuring that we're guaranteed food security. There have been studies around the level of waste from getting food getting food from farms, into the kitchen, and how much is lost within that space. And therefore, I think not just for government, but even the private sector, a significant investment in, storage capacity and logistics has to be made to ensure that we deal with some of these challenges.
All right, Mr. Erikume.
So overall, I think...
1 minute, Mr. Erikume, please allow me. I apologize. Let me move to Abuja, where Dr. Billy Gillus-Harry is also standing by for us. He's the President, Petroleum Products Retail Outlet Owners Association of Nigeria, Petrol. He is also standing by, and I want to bring him into this conversation to looking at the price of PMS, a bit of drop. We've seen reduction in the price of PMS in recent times, and of course the Dangote Refinery there's been issues around the movement, planned rollout of product supply, some burning issues. So Dr. Harry, let me allow you come into this conversation. We're looking at inflation, but of course, one way or the other, we also know that the price of PMS has something to do with inflation, our level of inflation in Nigeria. So tell us about this pricing and the planned movement of products from Dangote Refinery to supply marketers anytime soon.
Well, thank you for having me in your studio this afternoon. Good afternoon, Nigerians. And hopefully we should be able to have a very beautiful future in this country with the renewed hope agenda already kicking in and setting itself into perspective. Clearly, inflation is a nightmare to all of us as Nigerians or even as regular citizens of the world. In Nigeria, obviously the fear of the price of PMS is the beginning of wisdom. And that clearly has taken us always back into our deficit arrangements, for our inflation rating. So yes, the cost of PMS is going to be, impacting very, very highly on our inflation rate.
So now that we're having a bit of reduction, considering the PIA's implementation, price of crude oil flip-flop, is it going to continue to decline or it's going to be back and forth? Where do we go from here? And the planned movement of product, I also added that to my question. Will that impact pricing in any way? What does it mean for marketers like you?
Well, for pricing of petroleum product, especially PMS, is going to keep flip-flopping. It's going to be going up. It's going to be coming down, depending on the vagaries of the market. The values we get will be exactly what the market dictates. But in the last few months, we have seen where prices are being arbitrarily, fixed by some players in the industry, and that itself is going to be very detrimental to Nigerians, because it will look like it's, somebody has come to judgment that is going to bring the price of PMS down, but that's not the way it is. Today is already 17th, 2 days after the touted date of rolling out of free transportation for PMS, and we have not seen any significant drop in the PMS pricing. Ordinarily, one would have thought that with the kind of hype that presentation followed, that by today we would have been adjusting our prices to about 500 naira a liter. But that's not the case. So clearly that should send a very strong warning to all of us that we've had similar market strategies in the past where we have seen just one company doing the logistic to bring cement, sugar, and different products, including Indomie and all of that. And then the prices have always still been the same. For instance, today, pricing for cement is ranging over 10,700 naira. So it means that we are not going to have any reprieve in terms of PMS or any product if this same market penetration strategy is being adopted, where we see the difficulty of ensuring that the market pricing and the accurate price mechanism is applied to the prices of PMS in the retail outlet. Obviously, if anybody is losing so much money now to do some little good, before it's December, January, February next year, we should be looking at a very highly inflated and skyrocketed price in PMS. So we need to be careful. Our government needs to step in very urgently and bring all the players to the table so we all can have a clearly defined roadmap where refiners will refine, storage facilities owners will hold the product, whether by sea or by land, and then those of us who are the last mile in the market doing our retailing business will do it properly and follow what the right pricing of PMS should be, or diesel or any product, and we should be able to provide for Nigeria and see that the height of inflation is mitigated by just this one developmental item in the input to our economic activities, which is power, energy. And in Nigeria, we are dependent so much on PMS and fossil fuel.
with regards to competition, just this one for you before I come back to Mr. Erikume. With regards to competition in the oil and gas market, which I believe the PIA also stipulates, what sort of level of playing ground should we have? Talking about the marketers, like you talked about, the tank farm owners, the distributors, up to the point of the retail marketers, retail pump owners. So what level of competition should we expect, considering what the PIA stipulates?
Well, the kind of competition we should expect will be, first of all, product availability. For us in the retail segment of the industry, what we are looking for is availability of petroleum product, affordability, and right pricing. So basically, within that three elements, any player should be able to play within the price values that demand and supply will determine, not arbitrary price fixing to undermine others who play in the market and then try to become a depressive monopoly in the coming months and the coming years. So that's our take. I think we should all compete very favorably, follow the rules. Everyone that is involved in the business should be able to do what is needed to ensure that the ordinary Nigerian has energy at their beck and call, and they could be able to do as much as they can.
All right, back to Lagos now. Mr. Erikume, I want to take you up with regards to the stability that we've seen in the foreign exchange market. My research shows that there's still a bit of support coming from the Apex Bank. That's the central bank of Nigeria, of course, to support the Naira and make sure that there is no sharp drop from any end, from both ends, of course, the black market end and, of course, the direct source from the Apex Bank. But mine is, how sustainable is this, one? And considering the present state of our reserves, do you agree that the central bank is getting it right with regards to addressing challenges with Forex in Nigeria?
Yeah, thanks for that question, Tolu. I think one of the easiest way to answer it is to look at the data from last year and compare it with this year. As at last year, the official exchange rate was around $1,560. Today, it's around $1,530 or $1,550. So we've had that price stability for at least 1 year. Of course, with some movements, but when you look at it year on year, reasonably stable. The second way to answer that question is to look at the foreign reserves. The gross foreign reserves as at last year was, as at this time last year, was around $35 billion. Currently, it's around $38 billion. So it shows you that even the reserve is growing, at least from a gross perspective, and even from a net perspective, with the settlement of all the obligations and dealing with all the obligations relating to foreign exchange and clearing the backlog. I think we are in a better position than we were last year. So when people ask me about this, I simply tell them that we have sort of cracked it, at least in the short to medium term. And certain elements drive this. Obviously, the growth in our oil production, because no matter how you want to slice and dice it about diversifying the economy and increasing non-oil exports, crude oil continues to be significant in contributing to our foreign currency inflows. The other dimension to it is, again, local refining capacity has grown. So, the coming on stream of the Dangote Refinery, hopefully a few others are in the pipeline and they'll come on stream as well. That doesn't eat up into our, because petroleum products was a significant, or continues to be a significant portion of our imports and continues to consume FX. So to that extent, I feel comfortable that in the medium term, things have stabilized. It's now time for the government to ensure that those gains that we have recorded over the past 1 year plus are maintained by continuing to stimulate and incentivize exports, continue to make it attractive for foreign direct investment, and facilitate remittances, foreign remittances, people that have JAPAD, people that need to send money back home, ensuring that all the value chain around that is completely seamless. I think when we do that, as well as dealing with the issue of what can we do from a domestic angle to ensure that there are things which we can substitute to produce domestically. We've dealt with, or I'm still dealing with, refining capacity, but there are other things in terms of food production where I think we can also play and ensure that this FX stability is sustainable. Overall, I'm very comfortable, but we cannot rest on our oars. As a country, we have to make the necessary investments to ensure that this continues for the long term.
All right, Dr. Billy, I know you have to leave and we have to go on a commercial break. So just a final word from you with regards to, for me, many would say CNG-powered trucks would be cheaper. That's what some argument in some quarters. Now, what does that mean if also maybe other marketers get into the use of CNG? That's one. Increased crude production, more than 1.5 million barrels per day is what we have. How would that also help in-country production? So those two questions, and I'll let you leave.
Well, the CNG trucks, they're a very great innovation, and Petrol as an organization supports that. And from time to time, we have said that we want to do the best to ensure that our pride, the Dangote Refinery, is successful. But the point we're making is, while one company is successful, everybody else should be successful, and we should all grow along together. So the CNG trucks, yes, that's an innovation that everyone that is in the business should begin to work on. We should not at any time be looking to use that one advantage to create some kind of monopolistic market. So that is just the challenge. For crude oil, we have advocated that we should be aiming to produce 1 million barrels per day, specifically for in-country refining. And I do hope that Mr. Bayo Ojulari and the President and the Honorable Minister of State will be looking towards that with Mr. Komolafe in those areas, that we should be looking to produce crude oil in excess of our OPEC quota, to ensure that our local refineries continue to get crude oil for production, and they are also being given this crude oil in Nigerian naira.
All right, then let me allow you leave now. Dr. Billy Gillus-Harry is the President, Petroleum Products Retail Outlet Owners Association of Nigeria, Petran. Thank you so much. I do enjoy the rest of your day.
Thank you.
All right, now, Mr. Kenneth Erikume, we'll take this break, and when we come back, we will wrap up our own conversation. We'll be right back after this commercial break. Don't go away. All right, thank you so much for staying tuned. And just like I said earlier, this trend of inflation figures is from the month of March to the month of July. And we see that decline, month on month till we get to this point. And my guest has been Mr. Kenneth Erikume. He's a partner with PricewaterhouseCoopers Nigeria and leads the tax reporting and strategy in West African area. Thank you so much, Mr. Erikume. I really appreciate your time. Now, let's look at the global picture of this, the trade war and what it means for Nigeria. Yes, I heard our minister at the time talking about, we have alternative markets, the Asian markets. We can look away from the United States of America. But I'm looking at the bigger picture too. What do you make of the impact of these tariffs, particularly on Nigeria's economy? We still export crude and all of that to these countries.
Yeah, I think it's a massive risk and also a massive opportunity. right? It's a massive risk because once the trade wars, in quotes, started, the World Bank, IMF, looked at the 2025 forecast and revised global GDP growth to 2.34%. They had earlier estimated that it would be in the region of 2.7%. And this adjustment has been largely due to the rising tariffs, the response by countries, the trade policy uncertainty, and as well geopolitical tensions. Because once there is tension, that also affects markets and also affects investment as well. There is an expectation that it would ease, in the future, once things begin to stabilize and people are clear on where they stand vis-a-vis the US, as well as what it means in terms of their country being used as a platform for global trade. Just to also consider the sentiments as well. The central banks, the European Central Bank, India, China, and Russia have cut rates, interest rates to support growth and ensure that they stimulate, the market. But the US Fed has also held rates steady after 2 cuts in 2024. So it portends significant risk from a Nigerian perspective and as well as an Africa perspective. But there are opportunities as well. But it requires Nigeria as well as Africa to position themselves for those opportunities. And let me give you an example. One of the considerations for many is that, with the trade wars, the US was going to be inclined to use India as a substitute for some of the production currently happening in China. However, the conversations have evolved to a point where on certain elements, even India is under pressure. So there are things that we can do from an African perspective, in the global value chain that we are not currently doing. For example, I speak about, the global outsourcing, business process outsourcing opportunity, providing support to that value chain, especially with the advent of, generative AI. And, when you have countries whose official language is English, there's obviously an opportunity to play in that space. So I think Nigeria just needs to be clear on the policy direction. And I've said this several times around what exactly is our most critical and strategic value that will provide the global supply chain. Once we've identified that, just like what China did, with technology, automation, and India did with, technology and business process outsourcing, we identify that and make the necessary investments in the next 3 to 5 years. Because for me, I think that there is an opportunity because of this disruption for new players to get into that space and begin to add value. So those opportunities that were not there before, they are now there. The challenge, though, Tolu, is that many African countries have not positioned themselves, have not made the necessary investments to be able to take advantage of the opportunity. The other thing that could be critical for Nigeria is, the geopolitical fragmentation, or the actual conflicts that we've seen. there are currently over 110 active conflicts globally at this point in time. I know there have been conversations with the summit between the President of the United States and Putin to sort of diffuse the situation, with the Russia-Ukraine war. But it has remained a continuous stalemate, and there have been escalations in the Middle East. Again, for us, it's a strange one where that conflict has also ensured that the risk which we saw at the beginning of the year, which is that the price of crude could significantly settle and reduce, which would have created further strain from a fiscal perspective. It has continued to sustain the price, and that ensures that we're able to generate the foreign currency with the buildup of our reserves and dealing with our foreign currency obligations. But the risk, that's the opportunity. The risk is that the price, and you can see that there are moves, especially from the US, to sort of diffuse some of these conflicts and reach a peaceful resolution. Now, if that happens, the price of crude and other commodities could stabilize and reduce, which will put a risk on us from a fiscal perspective. Now, are we ready for that? I think the only way to be prepared for that is to ensure that we make the investments in our crude production, our facilities, and ensure that we ramp up production to over 2 million barrels per day, and ensure that we're able to deal with the changes.
All right.
So I think that's the context I have from a global perspective.
All right. And before I let you go, it's no news now that FARC has significantly increased. I think the last month was about 1.6, 1.5 trillion shared between states, federal government, and of course local governments. And some say that is also fueling inflation. I don't know how that comes to you.
There's been reports I've seen out there that suggest that that's the case. And there are reports that I've seen out there that, and I haven't done this study. I think it's an important study I must do at some point. Where they say, there's a direct correlation of the FARC distribution and the parallel market rate. All of that is unsubstantiated except someone does all of those studies. But clearly, with the FARC distribution, the states would obviously have much more to spend. And it's not a problem, Tolu. It's not a problem when you have more allocation to the grassroots. I think, the only challenge is if it's not getting to the grassroots and if investments are not being done. And those are some of the public conversations that have come through to say, the center has been able to devolve and, distribute more than record numbers of revenue as we've never seen before. However, everybody keeps talking about the federal government and holding the federal government accountable. However, we need to ask ourselves, with these sort of new revenue streams going to the state, can we begin to see the sort of investments they're making into healthcare, the sort of investments that are being made into education, infrastructure, and so on and so forth? I think if we see that, then it's not really a problem. It's, like I said, with every country that experiences growth, there is some element of inflation. The inflation just has to be stable and has to be moderate. And there has to be an investment for something that will yield, sustainable benefits in the future. So, that's my perspective around, the FAC allocation. It's a good thing, it may push inflation, that is something you can't avoid.
Yeah.
But is it an investment in something that would ensure that the quality of life of the masses improves? And is it an investment into the future? Before now, when we were spending all of that money in debt servicing, what we had effectively done is we have encroached into the commonwealth of future generations. So we need to, roll that back a bit and start making investments.
Mr. Kenneth Erikume, partner, PwC Nigeria, leads tax reporting and strategy. Thank you so very much for this Monday conversation. I really enjoyed it. I hope you did. Have a great week.
Thank you.
All right, there. Well, let's flip to the markets and discuss trading figures at the Nigerian Exchange Limited. Equities trader, Rostrum Investments and Securities Limited. Mr. Dele Sanusi is my guest. Mr. Sanusi, good afternoon. How are you today?